Everyone, this is Brad Matheny again. I'm trying to create some extra videos to help you guys really understand the general context of trading and risk allocation and learn really the psychology of trying to balance your trading. I know that this big volatility range has created a lot of success for people. I hear about it all the time, people making money left and right. A lot of that comes with using a straddle trade or a hedge, meaning, going both long and short with options. That would be buying a call and possibly buying a put, trying to get something that's a cheaper. Like if you think the market's going to go up, you'd buy a small portion in calls, maybe 10, 20% of your total allocation. Then you would take maybe 4 or 5% of your allocation and pick some longer duration put, maybe in the same symbol, maybe in a different symbol, that would hedge. Like if I think the financials are going up, I might buy a couple of calls in XLF. Okay, but if I think I need to hedge that position, and I think there's going to possibly be a breakdown in the market, or there could be some risk, I might choose to. Oh, hold on, don't know what this is. Well, that was just a scam call, like normal. So where was I? I'm trying to teach you guys how to trade efficiently. And like I said, if I wanted to buy, if I thought the financial sector was going up, I might take a small portion of my capital and try to get into something, not a 0 day, not a 1 day or a 2 day. I don't trade like that unless I'm just strictly day trading. I would look for something that's maybe, 20, 30, 40 days out, and give myself some opportunity, because I know that if I continue to hit 20, 30, 35% gains, I can, again, they add up quickly. You don't need to get winners. You just need to be consistent with 20, 30, 40% gains, and it'll add up quickly. Trust me. So let's say I thought the markets, like I said, I think the markets are topping. I told you that we're in this consolidation range. I've gone through and produced a lot of videos the last couple of days. And like I said, I had my short position on, but I'm going to come over here to my it's called the crash index. I've shared it with you a lot of times. I'll come in here and grab the symbol, put it over here so you can have it. There you go. Pause the video. That's the symbol for the crash index. This is the crash index daily up here. This is the dollar. This is the SPY, and this is gold. So again, trying to pay attention to 3 or 4 different symbols here, and I watch this on a continuous basis. Now, I have added the SuperTrend index, which is really quite simple. It's right here. That one. I like it. SuperTrend is kind of cool. It's almost like a parabolic system that's a little more adaptive. And so you can see on a daily basis, we're still bearish. Okay, we don't have a big breakdown of this trend yet. And this is daily. Now we come over here to weekly, and you can see that we are still bearish from weekly, and we have a long way to go potentially before it changes direction. But now here's the fun part. We come down here to like hourly, and I may not get some of these others. I do get gold, and you can see that the SPY went long back here on May 2nd. Today's May 8th. Okay, so even though I knew that we were topping, you can use this super trend indicator on the crash index, and you can get some pretty good triggers. Okay, I mean, you can really get some pretty good triggers. Come down here to 10-minute. Look at these triggers. Long trigger back over here on the SPY, came back right over here, took some heat right here, right? But long trigger from here all the way up to here. And for us, that's here all the way up to the end of the day here. So how much is that? Basically from there to there, that's 3.64%, but you also have this opportunity for a total of 1% move all the way up. Okay, so now we get this little short trigger, plays down here. I'll try to draw it in red, short trigger from here to here. And that prompts a short trigger from here to here. Basically, big, beautiful short. You got to move down here about 1 3/4 overnight, closing out over here, down 4 points, 0.78% roughly. Then we go into a long trade here. Probably going to end up swapping colors constantly. Long trade all the way through here before we get this breakdown. So you get a long trade from here all the way out to this breakdown bar here, which is the next open. How much did that actually generate? There's our long trade right here to here. So minus 0.19%. Nothing big. Really, nothing big. And you can do this with 3, 4, 5 day options. And that's all you're doing is you're running the SuperTrend index on the crash index, or SuperTrend indicator on the crash index. So now we have a short trade from here to here. I'll change the color of that other one. Short trade from here to this breakout bar. So we get the short trade again from basically this area early in the morning right here all the way to this breakout bar. And of course, that's going to be a bit of a loser. So the shorts didn't really play out all that well. Minus 0.87. But remember, you had, and that's actually at the open of the bar right here. So it's really 0.08 against you percent. But you have the opportunity here to grab this 0.57. And that's the point I'm trying to make, is that, when you get to this low level down here, off of this entry here, this is going to end up being 20 to 35% profit on an option, maybe more. When you get in this level and you get on these long trades and you roll through these potential highs, this is going to end up being, 15 to 25% profit on an option. When you get into this downward trend, right here at the beginning of the day, it breaks into this downward trend. Okay, you get this move, it rolls down here from where you open. You end up getting maybe a little downward move from where you open here, 16%. So that may be, maybe 10%, maybe. That's kind of a loser there. Okay, but remember, at this point, let me highlight this. Okay, let me highlight the fact that this is bearish from roughly this point on to out here, right there, bearish. Okay, and then we have bearish from here to that gap up open right there. Okay, so now everything else is bullish. I'll mark the other bearish area here from basically here to here, and then I will mark this area from basically here. Looks like it may have gone bearish at the close, maybe not, but from here, come up here, over to here. Okay, so here's the point I'm trying to make. So these are the bearish areas on a 10-minute chart. These are 10-minute triggers. Everything else is bullish, right? Come back over here to the hourly. Here's our triggers. So we have bearish triggering here. which means we probably had some confirmation here that we were going bearish, could be going bearish, counter trend bullish, meaning this is our primary trend on this breakdown for bearish. If we decide to go long, like we would have potentially right here, going into this uptrend, this is counter trending. So you want to remember that you can get a counter trend trade. They can be very profitable, but ideally you want to try to keep it very small. So if your primary direction is down, like we have right here on the hourly, and we move into a bullish trend mode, you probably want to trade, half of your normal allocation. Same thing over here. We're bullish from this point on. Oh, wonderful. Bullish, 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 bullish all the way up. So these little bearish trades would be half allocation. You would not want to be trading these with any type of heavy allocation. You would want to trade these fairly small because you're going against the trend. So we've marked these as potential counter trend. And I'll mark this a little bit different with a light purple as a counter trend. So now, okay, we've got trending, bullish trending, beautiful. We can trade long all we want through here, grab profits, coming back over here, counter trend short. Okay, that was on 10 minutes, grab quick profits, small allocation, go back into long trading, try to grab profits at 10, 15, 20%, then counter trend trading here, grab your quick profits, get out of it, realize that you're still long, and you're going to be moving into an uptrend, eventually an uptrend over here, trying to move into some generic trending upward. Okay, great, perfect, you're getting it. Now we go to daily. Now look at these same triggers, guys. Same triggers, general bearish. Same triggers, general bearish. So again, we're looking for a potential top. We have to stay cautious. This is a counter trend upward move. You can see this trend by generally just coming right across these lows, getting a nice solid upward trend. This is counter trending to where we're at. So now you can come down again, 30 minutes, and you come in here and you start taking a look at these trends and counter trends. The bearish trigger sets up about the same length. The bullish trigger then goes into bullish mode here. Everything from here on out is bullish all the way up, which means these counter trend trades that you had back on the 10-minute back here are really going against the broader context. Okay, maybe I don't think I can come in here, set this up as an interval. Doesn't look like I can set this up, but what I'm trying to tell you is that you can use something as simple as this SuperTrend indicator as one of the primary indicators that you use. If you're getting, upward trending here on a 10-minute, you're getting into moderate upward trending, okay? Compared to the daily is downward trending through this time frame, back over here. So we're still potentially topping, but we're running counter trend. So those upward trends, you want to keep those upward trends fairly small in allocation. But now if I come back down here to hourly, and I get confirmation of these upward trends, which you can see I have had very solid confirmation of these upward trends, providing very clear, upward movement. Look at this. This is a 4% move. This is another 3% move, potentially 4 off of these lows. And then we get into this weaker trend up here. Then we get into another bullish trend right here. So if you use your common sense, here's some really good swing trades by using this SuperTrend indicator and realizing that once you're in these counter trend modes and you get confirmation of the upside, you can trade these, even though I'm telling you, hey, this looks toppy. We're in a flagging formation, as I mentioned to you. You can use your judgment. We are in a flagging formation. We have come up, we've set up this high, Back over here, we flagged out. We come back down, rolled into that low. We set up another flag. We're in that flag. That flag is actually bullish until we get the breakdown. So I want you to be able to use these tools, to potentially use them on this crash index. I'll go back to daily so you can get the symbol. There's the symbol. I want you to be able to learn to do this efficiently. It's just keeping a variant perspective together to understand how it works, to trade efficiently, and understand that, you start getting movement here in the dollar, it can turn into a more pressure on gold. So this upward move in the dollar is putting pressure on gold right now. Okay, it's going to stall out the SPY, slightly bullish, which we're getting over here with the crash index moving higher. But generally, we're still in a breakdown trend. Okay, so even though we get a pullback, the general daily trend is breakdown. The general weekly trend is breakdown. The general 4-hour trend is slightly bullish right now. Looks like it started here on the 24th of April, which is quite cool. That's 2 weeks ago, roughly. So you can see that using something like this can really help you. Instead of just relying on, my cycle patterns, these, or my excess phase peak patterns, which are over here, you can come down and use the crash index and these SuperTrend. I'm going to 5-minute now, and you can see how the SuperTrend, does a pretty good job of staying long through bullish trending up through here. Long, this is the SPY, so it went long right back over here, stayed long all the way up to here. Pretty much pre-market here. What you must remember, though, when you're doing this is don't be greedy. If you get into a scenario where you've got a 1% or a 2% move, anything bigger than, as I'm telling you, if you get 20% to 30% or more in a trade, book it, take it, go down to trading smaller amounts, because these trades will repeat themselves over and over again. You want to just basically stick with the, like I did. I went to 4-hour here, I think it was. You can see these rotations. You can clearly see these rotations in the trend, and these are the directions you want to try to stick with, either hourly or 2-hour or 4-hour as primary trending. And then basically at that point, remember the daily and the weekly are going to be your overall general trend. But again, the 1-hour, 2-hour, 4-hour is going to provide you some really good opportunities. And when you get 20, 30%, even 10%, book it. Don't be greedy. Take your profits, take your $300, $400, $900, whatever it is, get into a smaller position and wait for a pullback. Now, if you want to see pullbacks, you can come down and, like I said, down to the 5-minute. And what you'll do is you'll realize that as we're still in that upward trend, when we get into a pullback, like right here, rolling low, super trend goes long. We see the SPY start to base and roll. Soon as we get into that breakout, remember, new highs coming across here or across here, that's where you get some follow through trending. The crash index, see how it continued to rally, pretty much like this. And the SPY, what did the SPY do? It finally got into rally mode right over here, rallied right on up to the peak right here. And this was from roughly this area to this area, a 1% move. That's going to be, maybe 40, 50, 60% on a 2-day or a 1-day option. not a 0-day option. Okay, so again, I want you guys to learn how to do this. I'm trying to teach you techniques to help you become better at this. Okay, it's not about me, and this is something I need you to understand. I will never tell you what to trade. Bottom line, it won't ever happen. I will teach you techniques. I will teach you confirmation techniques. I will help to provide resources. I will help to provide training. I will help you understand indicators. I will help you understand pretty much anything you ask me if I know an answer to it. But I will never tell you what to trade. That's up to you. You figure out how to trade. You figure out what to trade. You figure out your own allocation. And that's because I want, it's technically unethical and illegal for me to tell you to trade anything. I want you to learn to do it on your own. This is a matter of teaching you to fish, not telling you what to do. Okay? Or handing you a fish. All right, guys, I'm going to get back at it. This is the last video for today. I'll try to do some more if you have other questions. All right, guys, talk to you later.